It's no secret by this point that there's certain dividend-paying stocks and or ETFs that offer a massive amount of income for a relatively small amount of money invested throughout the market these days. But then there's certain ETFs out there that offer a very unique strategy that offer north of 40% yield. Which brings us right into today's video. We're going to talk about QDTE, or the Innovation 100 one-day till expiration covered call style ETF, which utilizes a very unique strategy and because of doing so has paid massive distributions, I'm talking about gigantic ones, to investors historically. Then later on in the video, I'm going to share with you how an investor could very easily, with a relatively small amount of money invested, earn $1,000 or upwards of $1,000 on a monthly basis by investing into something like this. So if you're interested in income generation, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So like I said, today we're talking about the round till ETF QDTE Innovation, or the 100 one-day till expiration, or ODTE covered call strategy ETF. It says QDTE utilizes a synthetic covered call strategy, which we've heard a lot about in the yield max ETFs, that seek to provide current income on a weekly basis while also providing exposure to the price of the Innovation 100 index. It then says the round till Innovation 100 ODTE covered call strategy, or QDTE, is the first ETF to utilize 0 days to expiry options on an innovation index, and it seeks to provide overnight exposure to the Innovation 100 index and generate income each morning by selling out of the money 1 day till expiration calls in the index. QDTE is obviously actively managed. Now, what's important about this ETF? Why is it so interesting? Well, first of all, weekly distributions, not monthly, not quarterly. QDTE seeks to pay weekly distributions out of sold option premium. High income potential. QDTE seeks to generate high income through a covered call strategy on the Innovation 100 index and harnesses volatility. It sells 1 day till expiration options on the Innovation 100 index and seeks to exploit structural market mispricings. So again, a very unique strategy. Sounds pretty complicated, but so far sounds pretty good, especially investors like myself that want to build out a long-term portfolio to potentially live off of. I mean, who doesn't want to get paid weekly distributions? So far, this ETF definitely has my attention. Let's learn a little bit more about it. So the ETF's launch date was March 7th of this year. It's actively managed, of course, and the expense ratio is 0.95%. Now, even though this is a pricey expense ratio for this sort of ETF, I'm honestly willing to pay a point because this sounds pretty complicated. Now, looking a little bit into QDTE, the Round Hill Innovation 100 covered call strategy ETF's performance on the max time frame, unfortunately, due to the most recent downturn in the market, this ETF is now down around 7.6% as far as the max time goes. You never really want to see this with these ultra high yielders. It sort of puts a bad taste in your mouth. We've seen this with the yield max and other products across the market. I understand that the distributions make up for the loss as far as price return goes, but still, this naturally is sort of a negative if you ask me. Now, even though this ETF is down around 7% in the max time frame, looking at these weekly dividends, again, weekly dividends or weekly distributions, it's honestly so fun the fact that this ETF pays on a weekly basis. That alone honestly would make me buy some shares of it. Just because this ETF pays weekly, I think that's so cool. Now, at least since inception, this ETF has paid anywhere weekly from 36 cents down to around 9 cents. And it looks like 9 cents was probably the lowest distribution that it paid. This was back in April. I guess the biggest one ever so far was back just as of recently in July. It paid 57 cents on a weekly. A 57-cent weekly distribution for an ETF that costs around $40 per share. This is madness. If this ETF at any rate keeps this up, this is going to offer a massive total return for investors. Now, a few things on this. First off, like I said, I think it's absolutely awesome the fact that this ETF pays a distribution weekly, just because as a dividend income focused investor, who doesn't want to get paid a little more frequently? But another thing I noticed, and that's very clear, is that you're pretty much going to be getting a different amount of payouts every single week, which could or could not hurt you. Obviously, if the distributions get bigger and bigger, who's going to complain? But along with that, I think some investors like myself want to have a more or less stable amount of income coming in. So even if the management sort of took some of the big distributions, made them a little bit smaller, and then save some of the money for the next one, made them a little bit more stable. I think some investors might like that. I personally would, but of course, it's just one person. I can't speak for everyone. So now that we talked a little bit about QDTE's strategy and how this ETF works, the fact that it pays out dividends every single week, some of them have been massive, some of them have been a little bit smaller, but the fact that this ETF is actually red as far as price return goes, looking at a $10,000 investment into QDTE, and this is back in March when this ETF started, over the last 0.4 years, so again, we don't have that much data to go off of, but just in this short time frame, using price return plus dividends or distributions, along with that reinvesting them along the way, an investor would have had a total return so far, again, this is only around a half a year, of around 5.5%, or if we were to annualize it out, around 13 or 14%. So even though this ETF has only been trading for a short amount of time, and even though there has been some decent volatility in the market, which probably is going to make this ETF's performance swing a little bit further because of the nature of this ETF, it has actually offered a total return in the green of around 5.5%. Now, is this a massive total return? Is this something to jump up and joy about? I don't personally think so, but if it were to keep trading how it does, and if it offers around a 12, 13, 14% annualized gain after the first year running, I think that would be an absolute win, especially for this newer sort of quirky ETF that offers distributions to investors every single week. Now, with that being said, with dividends not being reinvested, it's not necessarily as good, but still around a 5% total return and a 12.7% annualized gain. So either way, those distributions have definitely made up for the lack of price performance. But even still, like I said, there's other investments across the market that might be a little more stable if, of course, what you're looking for is consistent income, at least if you ask me. Now, what are my initial takeaways when it comes to QDTE? These ETFs are not only really interesting, and I love the fact that these different managers are starting to come out with almost a product for every single person's situation and basically every single person's strategy. Some investors out there that really favor income and maybe want to deploy a little bit more risk in their portfolio, this ETF that pays them distributions every single week might be a perfect addition for their portfolio. Now, for me specifically, would I ever add QDT to my portfolio as it sits currently? Well, first off, because it's relatively so new, I would rather see how this ETF trades for a little bit longer. Not necessarily sure on if or if not I would add any as of right now. Like I said earlier, I would definitely add some shares of this ETF to my portfolio just to get paid distributions weekly because I think it's a lot of fun and because I think this ETF over time probably won't lose that much money just because of the nature of the strategy and the cover call strategy. But I don't necessarily think that I would ever make this ETF a large portion of my overall portfolio, at least not as of right now until I see some more data, some more historical performance. But now going over some fun math and seeing exactly how easy it would be to get to $1,000 per month or around $500 per week even from an ETF like this that's paying 57 cents on a weekly basis just as of recently. If of course QDTE paid that 57 cents more or less continuously, which again that's probably unlikely, but an investor would only need to invest around 500 shares of this ETF, which would cost around $20,000. So in theory, an investor could spend around $20K and earn around $1,000 per month or $500 per week from an investment like this one. Now again, it's probably unlikely that it's going to continue to pay this much in distributions ongoingly every single week. But what if it did even if it still paid 35 cents, 30 cents more or less, that still means an investor would only need to invest around $30,000, $40,000 into this ETF to receive around $500 per week in distributions, which is massive. Now, like I said, I think we have to see exactly what this ETF does for a little bit longer and sort of get more of a cadence on what it looks like it's going to pay on a weekly basis. But I'm absolutely sold on the idea. I love the covered call strategy. Even the synthetic covered call strategy seems to work pretty well over time. And on top of that, offering income weekly to investors is a ton of fun if you ask me. But now lastly, most importantly, when it comes to QDTE, the Innovation 100 one day till expiration cover call strategy ETF, is this something that you either currently have in your portfolio, or if not, would you ever personally add this one to your portfolio moving forward? Let us know why or why not in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.